What is going on today, YouTube? Today I'm going to tell you the easiest possible way you can start investing. This can work in your 401k fund, this can work in any retirement savings, and this can be for any long-term investor. So a lot of people don't know what index funds are. Index funds are just funds made that, if they're total stock market, they're supposed to be made to replicate the S&P 500. Now, if you ever follow Warren Buffett, Benjamin Graham, anyone, you've probably heard a lot of them lately saying index funds are the way to go for the investor that just wants to put his money somewhere, let it go, and take it out in 40 years. And this is exactly what they do. If you look at the long-term track record of the S&P 500, it has just pretty much gone up. I mean, if you're in for a good majority of time, you're going to make a good return, and you keep on investing in it, you're going to make a good return by the time you are ready to retire and take out your money. Now, you're probably thinking right now, well, the S&P 500 is $26.37 per share. I can't invest in that. That's way too expensive. And you are right. So that is why Vanguard and Charles Schwab have made their own index funds, and they are just the S&P 500, depending on the one you choose. Vanguard has a lot of index funds, and so does Charles Schwab. But based on the ones you choose, they can get the exact ones that replicate the S&P 500 with minimum fees. Now, Charles Schwab just came out with these funds, and they are actually better. They have less fees than Vanguard. Vanguard is at 0.04%, and Charles Schwab is at 0.03%. Now, just to show a comparison so you believe that these do the exact same thing as the S&P 500, we're going to look at the SPX from about mid-2006 on. Mid-2006 on, to make this simple. We'll look at the bottom. We'll look at 2008 bottom. S&P we'll go to today's. Today's price value, S&P has gone up 245% since the bottom in 2008. So a 10-year period, you would have 2.5 times your money you had in there. So now we'll look at the Schwab S&P 500. Look from the same point, the bottom in 2008 to today. Roughly 263%, so it has outperformed the S&P 500. Take out fees? I don't really know. Not going to calculate that. That's minimum. And we will look at the Vanguard Total Stock Market Index, which is Vanguard's version. Gone up till today's price about 268%. So that was just proof that they replicate the S&P 500 index fund. And if you notice, the price of VTSAX, $65.75, and the price for Schwab and the Schwab S&P replica is at $41.38. So you have no excuse not to buy these. And they replicate the market. They do the exact same thing as the S&P 500 does. They own the same portfolio of stocks, and they own them to the same value, so they just do exactly what the S&P does. Now, if you go on their sites, they do have many other ones. But if you want to replicate the S&P 500 and you want to invest in something of that along those lines, for Schwab, you are going to look at the SWPPX, ticker symbol is up here, and for Vanguard, you are going to look at VTSAX. The only difference in these, Vanguard has an expense ratio of 0.04%, where Schwab has an expense ratio of 0.03%. You can check out my other video, I'll link it up here, that shows you what these fees mean in the long run and how they can really affect your portfolio. Now, a difference between 0.03 and 0.04 is not going to make that much of a difference, but it still does matter. So if you want to diversify even, you can own a little bit in the Vanguard, you can own a little bit in Charles Schwab. That way, you have two different companies, and that gives you better diversification in a sense, even though they should do the exact same thing. You never know. You never know what's going to happen to a company, or if a company decides they're going to raise their fees, expense ratio, all that good stuff. Now, if you do look on their site, I do want to point out, just watch when you are on there if you're looking for one to buy. There's usually a minimum like $3,000 to $5,000 investment to get into these. So in the meantime, I do not know what Schwab's is, but VTI is an exchange-traded fund, and you could essentially, it is more expensive, but you could essentially, it does the exact same thing. We'll look at 2008 bottom, up to today, 254%. So pretty much the exact same thing. And all this is this actually moves all day. Where these other index funds, they don't really move all day. They just open and close. VTI is constantly being traded all day long, and you will see the price fluctuate all day long. Where these other indexes, they will just open and close. And to show this, I'll go to a 6-month. See how they're all just lines? These are day-long candles. The stock price, it just opens and closes at the same price. It doesn't move all day long. So if you look at VTI, you have candles. So this price fluctuated all day long. So if you believe Warren Buffett's philosophy and you want to be diversified and you don't want to own single companies but you want to be in the stock market, look if your 401k, IRA, whatever you invest in the stock market from, see if they have these funds. Then you can replicate the S&P 500 and you do not have to worry about investing in single companies, because if you've watched any of my other videos, you never know about single companies. Even Amazon CEO came out today saying Amazon's death is inevitable because single companies typically do not last much longer than 30-year times. So what these index funds do, as a lower company keeps on getting more and more valuable, they take a larger position in these companies, which will technically eliminate the bigger companies that are falling out. If you do want a breakdown of what the portfolio involves inside these funds, you just have to go to their website and it'll show you what they are all invested in. So that's it for the video. I just wanted to make a short little video of how you can make stock market investing easy. It does not have to be complicated like everyone says, and you don't have to worry about picking the best performing stocks. If you want to replicate the market and you want to go in for the long time, you want to just all look at all these index funds instead of picking out the single stocks. Unless you really know what you're doing and you really want to pay attention to this stuff, even the best investor out there, Warren Buffett, says to invest in these index funds. So that's it for the video. If you liked the video, leave a like on it. If you got any questions, leave a comment below or want to see another video. Give me a suggestion. I will make whatever you want to see. And if you like the videos like this, subscribe to my channel, and I will see you in the next video.